Good afternoon. This public meeting of the Audit Risk and Compliance Committee is being held at 30 North 3rd Street, Harrisburg, Pennsylvania. By participating in this session, you are consenting to the recording, retention, and future viewing of this meeting. Although being live streamed via the internet, this meeting is a live, in-person meeting open to the public in accordance with the Sunshine Act. The live streaming of this meeting is presented as a convenience and is not provided as the official means for public attendance. In the event the live stream fails or cannot be transmitted for any reason, the in-person public meeting will continue without interruption. Please proceed with the meeting. Thank you.
Good afternoon. This is Tom Waters, designee for Treasurer Garrity. I'll be chairing our meeting today, and apologies for not being there in person. Well, welcome to the September 30th, 2025 meeting of the SERS Audit Risk and Compliance Committee. As we are now at our 1:30 start time, I call this meeting to order and ask Ryan McCoy to take a roll call and determine if we have a quorum. Ryan?
Absolutely. All right. Mr. Waters, on behalf of Treasurer Garrity.
Here.
All right. Representative Miller or designee?
Jill Vecchio for Representative Miller.
Okay. Mr. Enders?
Present.
Secretary Monson? Okay. And Secretary Spiker or designee?
Jeff Soderstedt for Secretary Spiker.
Okay, we have a quorum. Good to go.
Excellent. Thanks, Ryan. With that, our first order of business is the approval of the minutes of the July 22 Audit Risk and Compliance Committee meeting, which have been available for everyone to review on board docs. I move to approve these minutes. Can I have a second?
Second.
Great. So the motion has been moved and seconded. All in favor say aye. Aye.
Aye.
Any opposed or questions? Great. With that, the minutes have been approved. We have no old business or special presentations on the agenda, so we will move forward to item 6, new business. Here we have a number of internal audit office updates and the results of the level 1 actuary replication audit. The first item on the budget will require a motion, so I will turn the floor back to Ryan to discuss the internal audit fiscal year 2026-2027 budget. Ryan?
Thank you very much, Mr. Waters. As Tom said, for our first agenda item, I'm going to be presenting the Internal Audit Office's final budget for fiscal year 2026-2027. What that means is this money hits starting July 2026 and will go through the period of June 30th, 2027. The budget reflects our anticipated needs for an internal audit function that is appropriately resourced for the execution of next year's audit plan, responsive to risk, and aligned with the strategic oversight expectations of this committee and board. Next slide, please. All right, so our total preliminary budget, which includes personnel costs and operating costs, totals $1.33 million. Personnel costs include salary and benefits expense for a staff of 6 internal audit professionals. As you all may recall, the board approved expanding our office with 2 additional positions, a senior internal auditor and a staff internal auditor, both of which are currently vacant. These positions are reflected in this projection using rate assumptions based on current pay scales. Next slide, please. Turning to the operating portion of the budget, this is where you will see more of the detail behind the services and the tools that we rely on to carry out our work. The first line item here, we budgeted $322,000 for external financial statement audit services, which is a mandatory function for the agency. This estimate reflects CPA-based inflation rate adjustments from the 2021 through the 2025 period. Since the current contract expires in late 2026, we will be issuing a competitive RFP prior to that point. The actual cost will depend on the proposals received, but this estimate should allow for a fair estimate of cost. Next, we have $2,500 allocated for any other services the agency may need from KPMG, our current external auditor, between July 2025 through their contract expiration date in October 2025. The 2025 audit is the last audit KPMG is going to do for this agency until whoever wins the next contract will obviously be our auditor then. But this is just a little residual amount of money if there's anything needed from them for in between July and October when the contract ends. We have $56,000 reserved under other specialized services. This amount provides flexibility should the committee wish to engage internal audit support, hire a firm for an external investigation if something comes up, conduct a targeted risk review, or perform quality assurance improvement work. This is a continuation of the committee-approved approach from the prior cycle. Lastly, additional funds are allocated for staff training at $24,000 to maintain professional certifications and technical expertise, audit software licensing at $30,000, and other modest expenses for subscriptions and memberships that support benchmarking, standards access, and professional engagement. While some adjustments may be based off of developments over the next couple of years, including the outcome of the external audit RFP, the foundational structure and rationale remain aligned with the committee's oversight responsibilities and our evolving audit strategy. Any questions prior to moving forward with a motion?
Okay, very good. No questions. And then, as you mentioned, a motion is required. So I move that the Audit, Risk, and Compliance Committee recommend that the board approve for fiscal year 2026-2027 the following proposed internal audit office budgets. 1, a portion of the SERS administrative budget for the internal audit office of up to $1,086,000. 2, a portion of the SERS investment budget for the internal audit office of up to $104,500. 3, a portion of the state employees' defined contribution plan budget for the internal audit office of up to $67,000, and a portion of the Commonwealth deferred compensation plan budget for the internal audit office of up to $69,000, each substantially in the same form as presented in the internal audit office director's fiscal year 2026-2027 internal audit budget report, and each as amended and or ultimately approved by the Office of the Budget. So I have moved that. Can I have a second?
Second.
Thank you.
All
Ryan,
right.
we need a roll call vote for this, I believe.
Yes, sir. Mr. Enders.
Aye.
Mr. Waters, on behalf of Treasurer Garrity.
Aye.
Ms. Vecchio, on behalf of Representative Miller.
Aye.
Secretary Monson. And Mr. Soderstedt for Secretary Spiker.
Aye.
All right, and the motion passes.
Okay, excellent. We will now continue new business with an update on the internal audit plan. Ryan?
Great, thank you, Tom. I'll try to keep this as quick as possible. I only have 5 minutes and it's a pretty big spiel, so I'm just going to try to get through it. If you have any questions for me, feel free to ask at the end. And I can also meet up with you outside of the committee to go over this stuff further. All right, so over the past couple months, the Internal Audit Office has been building out our 2026 risk-based audit plan. If you want to turn to the next slide, please. Thank you. All right. The audit plan was put together for a 2-year period, fiscal year 2026 and 2027. Over the next few slides, I'm going to go over the specific audit engagements that the internal audit team has determined using our risk-based approach. Once we get through these planned audits, I will quickly go over the risk assessment process that was utilized for engagement planning. If management, again, the audit committee, have any other engagements that they would like us to pursue outside of what is being presented today, please reach out. Oops, sorry, I got an error here. Please reach out and let me know so that I can get it factored into the final plan, which will be presented to the committee at the December meeting. And one last thing before I move on to the plan itself, after some feedback from Treasurer Garrity's team, I am going to realign the timing of these audits for the final plan to focus on areas of higher risk ranking. Right now, I plotted them based off of synergy for audit recommendations. So it will look different by the time the final plan gets to you. Next slide, please. And one more thing, just to let you know, for the purpose of the presentation, I referred to the audits as a review in their title name, as you can see here, but they're actually all attestations engagements, and I will relabel them as such for the final plan that's presented in December. I don't want to, review can mean a couple of different things. These are actually audits. I just wanted to clarify that in case anybody had any questions regarding that. All right, so the first audit we selected is an audit of the policies and procedures that management utilized to mitigate third-party risk that they are accountable for. This audit is a carryover from the current plan, and the kickoff date is slated for October 31st. Next, we're looking to conduct an audit of the agency's procurement activities, which will evaluate all formal policies, procedures, and controls surrounding the impacted functions to ensure efficiency, effectiveness, and the right controls are in place. Next slide, please. Audits 3 through 7 are all operational audits of agency governance activities, including overall agency governance policies and processes, legal and compliance processes, fraud risk management processes, and IT governance processes. Next slide, please. These audits will review the agency's current policies and procedures against leading industry practices and provide recommendations to the board and management on ways to improve the effectiveness of governance activities at various levels of the business. Next slide, please. The last 2 audits of the plan include looking at management's policies, processes, and controls surrounding human capital and workforce risk, as well as its policies and processes related to business resiliency and the agency's maturity level when it comes to mitigating those risks. Next slide, please. Here's a tentative schedule for the upcoming audit plan, but as stated earlier, this will be completely rearranged for the final plan in December based off of the feedback I got from the chair's team. Next slide, please. All right, now I'm going to walk you through the risk assessment methodology that we use for audit planning, which is separate from the enterprise risk management exercise that will be discussed later in the committee's executive session by management. Internal audit reviews management's annual ERM risk matrix for as much alignment as possible, but that process will be fleshed out better once SERS has a chief risk officer on staff. The first step in the process is risk identification. We identified key risk categories across the agency, including governance, compliance, operational, financial, IT, and third-party risk. The risks were identified based on SERS structure, strategic objectives, and external and internal environment. As you will see further in the presentation, we went on to further identify specific risks that fall under the umbrella of major risk categories. The second step is assessing the risk, which was done from an inherent risk standpoint. We assess the risk before taking into consideration any mitigating controls to evaluate the risk impacts and likelihood. This provides an understanding of how severe the risks are without any controls in place. Next, we analyze the controls that SERS does have in place against the controls considered by the industry standard setters as best practices. This allows us to identify gaps between ideal controls and existing controls. The fourth step was determining the residual risk rating for the controls, which simply means that the risk that remains unmitigated, any residual risk you have left over from what your controls mitigate. Next slide, please. Okay. For the areas where residual risk remained high, we used our auditor's judgment to build the 2-year audit plan that we just covered. And again, the Internal Audit Office's mission is to provide meaningful recommendations to management so that risk can be brought down to acceptable levels. I want to make a couple points. First, we didn't take into consideration, again, just like prior year, of any management's controls that fall under the SOC 1 Type 2 audit, because they were just objectively tested by the SOC auditor, who will be up in a few just to present the findings from that report. Next, we went through an agency IT assessment conducted by Linea, an external assessor, and the agency is actively working towards upgrading its pension administration system. A lot of the issues we find result from that old system. And lastly, I took into consideration the audit selected as part of the plan I took into consideration the audits selected as part of this plan because they've never been conducted by internal audit before, at least as far as I could determine. And because of that, I rated the residual risk higher. That doesn't mean that there aren't effective controls in place in those areas, just that internal audit has not had the opportunity to test their operating effectiveness and determine formally where gaps may exist. And the sixth step is communication and reporting, which implies that internal audit will present the results of our risk-based audits, including the risks that were determined through planning, as well as control effectiveness to management and the Audit Risk and Compliance Committee in a clear and concise manner through meaningful reporting practices. And the last step in the process is ongoing monitoring. From an internal audit standpoint, this means that we intend to continuously monitor the risk environment, the effectiveness of the controls in place, and adjust the risk assessment and audit plan as necessary with prior Audit Risk and Compliance Committee approval. Next slide, please. All right, so the Internal Audit Office recently acquired Teammate Plus and Analytics for use as our paperless audit management tool. This application, which is cloud-based, allows us to build an agile risk-based audit plan. This image shows some of the major risk categories in the risk assessment tool that fall under the audit plan. You can see that it allows us to adjust the risk rankings based on risk likelihood and risk impact for both inherent and residual risk. Next slide, please. The risk impact scale is based on ranks that go from 0, which is not scored, to 5, which is very high. Next, the risk likelihood scale is based on ranks of the same levels, with 0 not being scored to 5, meaning that the risk of the event occurring is almost certain. Next slide, please. As I discussed prior, each major category of risk is broken down into more specific risks. These risks are business unit specific. Next slide, please. For each risk category and underlying sub-risk in the assessment, we provide a risk description, the rationale for the risk ratings, and the controls recognized as best practices that should be in place to mitigate the risks to a lower level. Next slide, please. All right, I'm not going to read everything here verbatim. I want to encourage you all to take a detailed read through for more context. These are the list of the controls that we identified for third-party risk. Not saying that they're in place here at the agency, but this is the catalog of controls that we identified that could help mitigate third-party risk. So that being said, next slide, please. This is a continuation of the last slide that also has more detail on those controls. But what I wanted to point out that I included the sources that were utilized to build this risk assessment underneath here, listed out, and that the American Institutes of Certified Public Accountants, the AICPA, the Financial Executive Institute, the American Accounting Association, and the Institute of Management Accountants, those are all the organizations that make up the committee of sponsoring organizations for the Treadway Commission. So essentially, we use COSO when we're using this report to structure how we build it up. I just wanted to kind of make that clear that those standard setters you see down at the bottom of this, COSO is a culmination of them coming together saying what the right answer should be for a control framework, for a risk management framework. Next slide, please. All right, the last part of this I want to talk about is the decision-making process we use to come up with our risk ratings. Using third-party risk as an example, we analyze what we know about the agency, what we know that the agency is doing as a whole to mitigate third-party risk. For instance, SERS does monitor our third-party relationships. In our analysis, we identified controls that could help mitigate more third-party risk, as well as circumstances that hinder risk mitigation, such as not having a formal agency-wide third-party risk management framework. Or there's external relationships that the agency has that we can't control, that we're not getting SOC reporting on, meaning we trust them with our information, but we have no look at the details as to how these entities protect our data on our behalf. And lastly, internal audit's not a control, but we should be the board's way of obtaining reasonable assurance that these relationships are performing as required through conducting performance auditing engagements of the entities we do business with. This includes benchmarking what is occurring against key performance indicators contained in the service level agreements. As it stands now, we're a staff of 4, and that kind of work is hard for us to fit into our audit plan. Next slide, please. All right, and this concludes my preliminary review of the 26-27 plan and the risk assessment performed that helped derive it. Again, if anybody has any further questions regarding the audit plan or our risk assessment, please reach out. I'm happy to walk you through in greater detail via a Teams call. Any questions before we move on?
Okay, hearing no questions. Next, we have a Global Internal Audit Standards Gap Assessment Procurement recommendation. So back to you, Ryan.
Yep, thank you, Tom. All right, the last item of my update is a discussion on the procurement of an independent firm to conduct a gap assessment over our office for conformance to the Global Internal Audit Standards. Next slide, please. The Audit Risk and Compliance Committee charter delegates oversight of SERS internal auditors to the committee, which includes working with management to select the auditors through the Commonwealth's request for procurement process. At the July meeting, the committee authorized the Internal Audit Office to sole source this vendor, but upon working with our procurement officer and our chief counsel's office, it was decided to pursue the service via competitive RFP request for procurement instead. The Internal Audit Office is mandated through our charters to strive for compliance with the Institute of Internal Auditors Global Internal Audit Standards. We do not have the redundancy in our office to perform our own gap analysis while executing our risk-based audit plan. We're required to have a formal quality assessment review completed every 5 years, which will be, according to our strategic plan and how we plotted that out, will be 2029. The gap assessment will provide meaningful recommendations to our office to implement so that by the time 2029 is here, we're successfully set up for that QAR. Next slide, please. I've been working to put together a draft statement of work for this RFP, and I've been in touch with our procurement officer and our chief counsel's office for their guidance and expertise on getting this moving. Once the board approves us to move forward with this RFP process, the Audit Risk and Compliance Committee chair is going to seek volunteers from the committee to sit on the technical evaluation committee for this RFP and provide an independent vote for vendor selection. Once the volunteers are selected, the ARC committee chair will provide the board with a list of names that they would like to have appointed to the technical committee. Next slide, please. Once a committee is selected and the proposals received, the committee will independently score them and determine the vendor that will complete the engagement. I hope to have a vendor to the Audit Risk and Compliance Committee for formal recommendation of board approval by the February meeting if possible. I'm not guaranteeing that, but that's what I'd like to shoot for. Next slide, please. And on that, does anybody have any questions before I ask the committee to bring a formal motion forward for board approval?
So hearing no questions, I'll move this motion here, Ryan. I move that the Audit Risk and Compliance Committee recommends that the State Employees Retirement Board authorize SERS staff to initiate the request for proposal procurement process for a gap assessment of the Internal Audit Office for its adherence to the Global Internal Audit Standards as set forth in board docs at agenda item 6A III. Can I have a second to that motion?
Second.
Thank you. Ryan, can we have a roll call vote?
Absolutely. Mr. Enders.
Aye.
Mr. Waters on behalf of Treasurer Garrity.
Aye.
Ms. Vecchio on behalf of Representative Miller.
Aye.
Secretary Monson. And Mr. Soderstedt on behalf of Secretary Spiker.
Aye.
All right, and the motion passes, Tom. Thank you.
Great. So that motion is approved. Our last item in new business is the Level 1 Actuary Replication Audit results from Gabrielle Roeder Smith and Company. I'll turn it over to them.
Thank you very much. Thrilled to be here today. I am Jim Anderson. With me is Bonnie Wurst, and we have audited plans, just so you know, across coast to coast, between the two of us from Maine through Idaho. This is our second statewide together. We've done 2 together. We did Delaware as well as Pennsylvania, but we're thrilled to be here. I also wanted to note that our president and CEO, Judy Kermans, has joined via Teams, and she just waved. If there are any broader questions about GR, should that come up. And the auditing actuary, as is usual in these sorts of things, is also in the room. So it's always good to have a bunch of actuaries in the room when you're talking about things. Shannon, next slide, please. So we're going to go through a series of slides here. We have 10 minutes. I will try not to talk like the person from FedEx, you know, blah, 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 blah. But to give you a sense of why we're here, it's really that last bullet point. Actuarial work is very, very specialized. The liabilities are a hugely important matter, and it's really difficult for retirement boards administrators to get a sense of, is the actuary doing a good job or not? So this is very, very standard in our work. We've been audited many, many times. Korn Ferry is audited many, many times, and it just helps to keep the work very good as you go through as we audit these things regularly. Next slide, please. The audit is a process where you hire us to audit Korn Ferry and provide an opinion on the quality and accuracy of the work. We note here the Government Finance Officers Guidelines, Association guidelines call for an audit at least every 5 years. New York City goes every 3 years. We've audited them. The state of Wisconsin's every 5 years. Virginia's every 4 years. But most systems have audits on a regular basis. Next slide, please. We're going to talk about a lot of these items here in future slides, but it's really the important part. We're going to express an opinion about the reasonableness. And then lastly, to note, we're not going to talk about any accounting today. So you don't get actuaries talking about accounting. There's no GASB standards that was in the project scope. So you will not see that in our audit. Next slide, please. So why are we doing this? The goal, we want to make sure the valuations are performed correctly, that the methods and assumptions are used are reasonable, and the device is sound. And we'll talk about that a little bit more as we go forward. These next 2 slides are directly from the RFP, so I'm not going to read them at all. It's just important to note that this is not Bonnie and I taking a look at the report saying, okay, it's got these sections, the numbers look okay. We dove in deep. We dig in with our programs into each individual person's liability in terms of how they make up the liabilities of the plan. Really, really important to check that, check the various components, actual important components that are really important to develop, funded status, contribution rates, et cetera, and really are trying to validate this valuation in accordance with the standards that govern our practice, the Actuarial Standards Board, the Actuarial Standards of Practice. And I think that's pretty much all I'm going to say. The last bullet here is what we're doing today. We've produced a report. Korn Ferry had a chance to respond, to look at it, make comments. It was a good process going back and forth, and now we're presenting the report today. Next slide, please. Okay, I've got 2 slides to go. We looked at the December 31, 2023 actuarial evaluation report. We investigated that, we reviewed it, received it. Similarly, the last experience study of the plan was reviewed, as well as that subsequent investment return assumption change. Now, you may be aware, this is very common in public sector retirement systems, having an interim review of that as an investment return assumption. Actuaries have to attest to the validity of the assumptions each and every valuation date. So that has happened at other statewide plans I've worked on as well. We reviewed a full set of census data for our participants, as well as financial data, both as of December 31, 2023. We looked at the SERS statutes and member handbooks. And my last slide, before Bonnie takes off and starts running, I guess I've come off my thing, but our conclusion is that the results of the valuation are fair and reasonable. Every audit finds something, and we discussed with Craig some of the changes that we are recommending. And the remainder of the presentation, I'll pass on to Bonnie for more detail.
Thank you, Jim, and good afternoon, everybody. On slide 10, we itemize the major categories that we reviewed, and we will look at each of those in detail. We collected census data from both Korn Ferry and from the system, and we independently processed that member data to make sure that we agreed or that we had a complete review of the data that was used to calculate the liabilities and costs of the system. And our conclusion is that there were no major concerns. We do note one very minor area for further investigation, and that's just that two data fields that are very similar were switched. This affected, by our count, less than 150 people in the system, and they're either very long hires or judges. And so very minor impact on your aggregate results for the overall numbers. So no major concerns related to census data review. On the next few slides, we'll talk about assumptions. So we did review all of the demographic and economic assumptions used for the valuation. We'll start with demographic assumptions. And this is a category of actuarial work where it's at least as much art as it is science in setting assumptions. There is no one correct answer. And so we have identified some suggestions, some areas for further investigation, but nothing of a major concern. The detail is there, but for example, we're recommending that when setting a pre-retirement mortality assumption that a Society of Actuaries table be considered, and so on. And so again, we believe that the demographic assumptions are reasonable, and we've offered some suggestions for future experience analysis. The economic assumptions were also deemed reasonable, and we, we're talking about it quickly today, but we spend a lot of time on each of these categories. So economic assumptions are long-term assumptions, but the short-term does matter, and so we look at it from all perspectives possible. We feel that your the price inflation assumption used for the valuation of 2.5% is reasonable, and we have many valuations using that same assumption. Moving on to the next slide, one of the most important and most influential assumptions is the investment return assumption, which is currently set at 6.875%. And so based on the asset allocation of the fund, future projections based on capital market assumptions, and the actual standards of practice, et cetera, our conclusion is that the assumption is reasonable. It was reasonable at the time it was proposed, and it's reasonable today. And so that's good news. All right, the next general category is that we read every word of your report, our team did, and we reviewed the report. We wanted to make sure that it's thorough and understandable and complete. And we found again that the report was thorough and understandable, and we support the work of Korn Ferry. We recommend some additional disclosures to comply with kind of some details of the actual standards of practice, and also just maybe to enhance understanding, because we have the advantage of coming into it as an independent set of eyes without knowing all of the nitty-gritty of the plan like the retained actuary does. And so we've suggested a list of things to consider, but again, overall check mark in terms of the quality of the valuation report. Okay, all of the remainder of our findings have to do with our actual numbers. How did the numbers look? So we replicated Korn Ferry's principal valuation results to within acceptable tolerances, which were set in advance. For example, we said we would like to match the present value of benefits to within a 2.5% range, and we achieved that. And so we're comfortable that the results are within a range of reasonability based on our independent programming and calculation of the numbers. One area identified for further investigation has to do with the practice of including contribution receivable directly in the actual value of assets. Our suggestion is instead of that it be recognized in the contribution rather than in the assets. And that's noted and detailed in the report for consideration. This table shows the comparison of numbers. So just to orient you to these in future slides, the total present value of future benefits, the retained actuary's result was 64,467 million, and ours was 63. And so if we compare that, we were within 2.1% and our tolerance was 2.5%. And so that's our documentation of matching it within the acceptable tolerances. This slide documents the actuarial accrued liability, the unfunded liability, and the funded ratio. And if we just maybe look at the last two rows, the unfunded actuarial accrued liability matched to a very close degree, and the funded ratio, the retained actuaries result was 69.6%, and GRS's was 69.2%. And again, that's within an acceptable tolerance. Those are actually very close matches considering the size and complexity of the system. Okay, on this slide, we compare the contribution rates. And again, if we just shortcut to the bottom row, the total employer contribution matched within 66 basis points. And you can take a look at the results right there. But again, we were very comfortable that the valuation was producing a reasonable result based on our replication. Slide 20 gets into a bit more detail about the sources of the contribution, but in the interest of time, I think we'll go forward 2 slides to our recommendations and primary conclusion. Our formal opinion, which you can read there, is that we believe the work of the retained actuary reasonably represents the actuarial position of the system. We believe, assumptions and methods are reasonable. The data is being processed correctly, and we were able to replicate the results. The recommendations that we just talked through are summarized on the current slide, and in the end, we just want to say thank you for the opportunity to work with your system. We hope our work was helpful to you, and we are happy to answer any questions you have. And I do encourage you, this was a very quick highlight. There is a detailed report with more detail than you'd probably ever want to read through. So thank you.
Thanks very much for that. Are there any questions for the GRS team here? Okay, hearing none. I move that the Audit Risk and Compliance Committee recommend to the State Employees Retirement Board to accept the auditor's opinion of the Level 1 actuarial replication audit performed by Gabrielle Roeder Smith and Company on the results of Korn Ferry's 2023 actuarial valuation as attached and located in board docs at agenda item 7B. Can I have a second?
Second.
Great. Ryan, can we have a roll call vote?
Yes, sir. Mr. Enders.
Aye.
All right. Mr. Waters for Treasurer Garrity.
Aye.
Okay. Ms. Vecchio for Representative Miller.
Aye.
Secretary Monson. And Mr. Soderstedt for Secretary Spiker.
Aye.
All right, Tom, it passed.
Good news. With that, we need to go into executive session for our next topic. So I'll turn it over to Joe Marcucci.
Thank you. There are a lot of items on the executive session agenda, so this will be a longer announcement than normal. Just a heads up on that. The Sunshine Act allows auditors to conduct closed working sessions with the board for the purpose of examining, analyzing, discussing, and deliberating on the various accounts and records for which the board is responsible. The Sunshine Act allows an executive session to consult with its attorneys regarding information or strategy in connection with litigation. The Sunshine Act allows an executive session to review and discuss agency business, which, if conducted in public, would violate a lawful privilege or lead to the disclosure of information or confidentiality protected by law, including but not limited to privileged and confidential communications with attorneys, and to review and discuss agency business, which, if conducted in public, will lead to the disclosure of information or confidentiality protected by statute, including but not limited to the information, the disclosure of which would put at risk the safety and security of Commonwealth employees, buildings, property, cyber systems, or the financial assets of the board and the members and participants of the plans the board administers. All of the agenda items for the scheduled executive session are agency business that fall within one or more of the permitted exceptions to an open meeting under the Sunshine Act.
Before we enter executive session, please give us a minute to make a few technical changes here in the boardroom on your behalf. We will make you aware when the appropriate changes have been successfully made and attendees in the Teams meeting are checked. As a reminder, the public meeting will resume on this live stream connection when the executive session is complete. In addition, SERS often offers meeting notification updates via text messaging. For information on text notifications, please review our posted agenda on the SERS website. Thank you. As a reminder, this meeting is being recorded and is now being live streamed. Please proceed. Thank you.
Thank you, Sheila. We are now back in public session, and a motion is needed to accept the results of the SOC 1 Type 2 audit that we reviewed in executive session. For that, I move that the Audit Risk and Compliance Committee recommend to the State Employees Retirement Board to accept the auditor's opinion of the SOC 1 Type 2 audit performed by certified public accounting firm Clifton Larson Allen, LLP, as attached and located in board docs at agenda item 7A. Can I have a second?
Second.
Thank you. Ryan, can we have a roll call vote, please?
Yes, sir. Mr. Enders.
Aye.
All right. Mr. Waters for Treasurer Garrity.
Aye.
Ms. Vecchio for Representative Miller.
Aye.
Secretary Monson. And Mr. Soderstedt for Secretary Spiker.
Aye.
All right, the motion passes.
Excellent. Moving along with our agenda, we have no public informational items at this meeting. I'd now ask, are there any concerns, comments, or questions for anyone on the committee or staff?
Tom, real quick, just before we adjourn, I just want to point out to the committee, since we're all here, the data privacy and protection audit was initially scheduled to be discussed in this meeting, but we're currently making sure the completeness is there for everything. So the treasurer's team was looking to potentially have a special meeting to discuss that report sometime in late October or November. As soon as I find out more about what is going on with that meeting, I will let everybody know and reach out. Tom, you have anything more to add to that?
No, I think that catches everyone up. If there are no additional questions or comments, I'll make a motion to adjourn this meeting. Can I have a second?
Second.
Thank you. All in favor, say aye. Aye. Okay, with that, we are adjourned. Our next meeting is December 2nd. So everyone take care, and we'll see you then.